Welcome to Trading Nation. I'm Mike Santoli. Just when you might have thought a retail resurgence was on the way, Macy's down nearly 20% after slashing guidance and dragging down the rest of the retail group. So is this just a Macy's problem, or is an even bigger retail rout ahead? I'm joined by Matt Maley of Miller Tabak and Mark Tepper of Strategic Wealth Partners to get into that a bit. Matt, maybe survey the damage for us across retail from this announcement, from all these stocks going down in sympathy. How does the group look to you?
Well, you know, it actually doesn't look as bad as it might. I mean, one of the things, of course, is if you look at the consumer data, it still looks out pretty good, whether it be the employment data we saw last week. Wage growth has been picking up for several months now. And, of course, consumer confidence remains high. The one thing that concerns me, though, a little bit is in that consumer confidence data, the expectations number, I mean, the one that looks forward, has broken down the last couple of months. It's actually getting close to testing its trend line going back to the 2009 lows. So if that breaks down further, it's going to be a bit of a problem. But on the group overall, you look at the XRT, a retail ETF. Even though it broke down quite badly today, it bounced well off its initial lows, and it's well off its lows from just a couple of weeks ago. And when I look at the XRT, I look at on the resistance side, we've got a key level at the 50-day moving average. That's stopped the last two rallies in the last quarter or so. So if it can finally break above that, it's going to be positive. On the negative side, you have a line in the sand. It's at 38.50. That's a level that it has bounced off of 5 out of the last 6 years, and it did so just back in December, just a few weeks ago. So that's provided excellent support. So right now I'm kind of saying things aren't maybe as bad as they look today. You need to be choosy on which stocks you want, but if we do see a further breakdown in the XRT and in consumer confidence, we'd have some problems. All right, yeah, that XRT, of course, an equal weighted ETF, so pretty broad look at the overall sector. So, Mark, I guess you could really make the case a lot of the big names in retail, Macy's included, but Target and Kohl's, they look kind of cheap right now, but would you be able to bet on them here?
I wouldn't, and I agree with Matt. I mean, the consumer's strong, and this is really a Macy's-specific problem. MasterCard showed 10% online sales growth for retailers during the holiday season, and overall, retail sales grew by 5%. So what does that mean? Surprise, surprise. I mean, more people are shopping online, less people are actually walking into these brick and mortar retailers to buy their stuff. So consumers are still spending. The consumer's strong. Consumer sentiment is just shy of its March 2018 high. So this is definitely a Macy's-specific problem. It's just not a good company. They're a dinosaur. They haven't evolved. They were late to the game in shifting their business towards e-commerce. They have absolutely no pricing power. I mean, shoppers walk in expecting a massive discount, which just kills margins. And their service and customer experience is non-existent, as opposed to a retailer like Nordstrom, which has loyal customers because of their awesome service and customer experience. So you do need to be selective here. There are good companies. I'd be favoring those companies that are evolving while providing a good experience, like Nordstrom. Their digital sales are up 20% year over year, and the stock would be so much higher if not for their credit card interest error, which to me just represents a buying opportunity. Or you focus on those retailers that are more insulated from the Amazon effect, like O'Reilly Automotive, because people aren't just going to buy all of their parts to fix their cars on Amazon. So I think there's good opportunity there as well.
Yeah, pretty good bet that those companies still have a little bit of a moat. Guys, thanks a lot for joining us today. Appreciate it. And thank you for watching Trading Nation. I'm Mike Santoli. We'll see you next time.